Hello from Trend Signal for a review of the data and events the week beginning the 16th of September. Monday morning, crude oil prices reacted to the news that Saudi Arabia was hit by drone attacks on its oil infrastructure in Abqaiq. The attacks effectively reduced the kingdom's production by half, certainly for the next few weeks, although it's not clear for how long. The 20% rise that happened on overnight on Sunday night, Monday morning, was the greatest, certainly in percentage terms, since the 1990 invasion of Kuwait by Saddam Hussein in Iraq. The responsibility for the attack was taken by the Iran-backed Houthi rebels in Yemen. Needless to say, the US and most of the West believe this to be the work of Iran, even if they weren't, directly involved. Most believe that the drones were supplied by Iran. It's all a bit weird, really, especially after last week's more sort of conciliatory words from Donald Trump regarding Iran. We then get this, and I suppose the question is, why would Iran ask the US to make concessions on the sanctions before carrying out negotiations and then jointly organize and facilitate an attack on Saudi Arabia's oil infrastructure, knowing full well that Saudi Arabia's key ally, the US, would react? So, all a bit strange, but some of the effects are starting to subside as we progress on Monday morning, but significant moves nevertheless. The attack certainly has been quite disruptive to oil supplies, and it doesn't look like it's going to be absolutely catastrophic. Saudi supplies about 10% of the world's oil, so a loss of half of this, that's 5%, could be catastrophic if action was not taken. And already Trump's tweeted that the US will make available their strategic reserves, while Saudi Arabia said that it'll should be able to recover production in the next few weeks. They can also use their reserves to make up for 40% of their lost production. So all in all, it sounds bad. The reaction was bad first thing in Singapore and Tokyo, but the markets have recovered from that. Still sharply lower, but nothing like as bad. Let's have a look at the calendar. It's a bank holiday in Japan, so any of those of you looking at the Nikkei and wondering why it was up, it wasn't. It was up on Friday, with crude spiking higher at a time when more data suggests that the global economy continues to cool, with both US and China sort of embroiled in this trade war that is slowing growth and economic activity in both economies. It really does focus the mind on what is going to happen this week, certainly with the Federal Reserve. We've also got Brexit goings on, of course, and not just the Fed. We've got other central banks as well. So let's have a look. So the monthly policy minutes are the first major release on Forex Factory, but we do have something happening on Monday, in fact, here in the UK, with Boris Johnson travelling to Luxembourg to meet up with Jean-Claude Juncker for this first face-to-face meeting. I gather that's a lunch with, he likes a bit of wine, does Mr. Jean-Claude Juncker. And then on to meet Michel Barnier, the EU's lead Brexit negotiator. Not sure about it, but the mood music sort of is gradually changing from the Brexit negotiations, although some of the rhetoric does sound sort of fairly hard-nosed still, but we'll see. Time will tell. Tuesday, we have, before I mention about the inflation data, we got the Supreme Court ruling. Timing, not too sure, but apparently it could happen anytime from Tuesday, on the legality of the prorogation of Parliament by Johnson's government. So that'll be announced on Tuesday. What effect that'll have, I'm not sure. UK CPI or UK inflation data now falling back below the government's target of 2%, 2.1% it jumped to last month, but back down below at 1.8%. Inflation is fairly benign across most developed economies anyway, so I don't think that'll be attracting much of the attention of central bankers. Perhaps if it falls too far, it will do. We then have on Wednesday, let's get to Wednesday. So I've jumped from, I do apologize, the CPI data is out on Wednesday. I shouldn't have said it was out on Tuesday. That's Wednesday, of course. We then have crude oil inventories ahead of the Federal Reserve. Crude oil inventories, it'll be interesting to see how these stats change over the next few weeks, but I'm not entirely sure what the market will make of any stats out this week historically, because it's rather been overtaken by events in Saudi Arabia on Saturday. The big event of the week is the Federal Open Market Committee meeting or the conclusion of it. It is the important release of the week. The market's priced in an almost certain cut in rates. If we look at the expectations based on interest rate contracts on the Chicago Mercantile Exchange, you can see that there's 82% probability that the market rate will move from 2 to 2.25% to 1.75 to 2%. The fact that they're going to cut rates is not in question because it's almost a shoo-in. What the market will want to hear are plans, hopefully, certainly for Donald Trump's thinking, plans for another cut in rates before the year end. And the market expectations have remained mixed. If we look at the next meeting in October, there's still 55% plus 10, 65% think that rates will remain where they are. 11th of December is the last meeting, and then you've still got 36 of 42% still believe that rates could remain where they are, assuming they're cut on Wednesday evening. So it is not, it's far from certain, and it's something that the market, Trump, the Federal Reserve, will be hopefully discussing, cogitating on Wednesday evening, and we'll know more by the time the press conference concludes at 7:30. Okay, other data out this week. We've got two other banks, central banks, in fact three, in fact on Thursday. We've got the Bank of Japan, the Swiss National Bank, and then we've got our own Bank of England in the form of the Monetary Policy Committee. With rates as low as they are in Japan and Switzerland, there's very little chance of anything. It's more the press conference that will provide a bit of insight into what these central banks are thinking. Certainly the data is slowing across most major economies, and that includes Japan and Switzerland. The Bank of England, MPC, we get the vote. Obviously, there's no chance of any change in rates. Quite a few sort of articles talking about the way that growth is starting to slow here in the UK. Of course, not by anything like the measures or the extent to which growth has slowed in Italy and Germany and France. So I'm not altogether sure what the MPC can and should be doing at this stage with Brexit just around the corner. I would have thought their hands are largely tied, but data has been quite a bit softer, but not as soft as some EU economies that I've just mentioned. After all of the shenanigans with central bankers in the afternoon on Thursday, we've got the Philly Fed Manufacturing Index, which is from Philadelphia, one of the Federal Reserve regions with a lot of manufacturing, so it's quite closely watched, and another poor number, slumping from 16.8 to 10.9. At least that's the expectation, which really ends the week. Although on Friday, something that's not often talked about, we've got the quadruple witching day in the US, when futures, options on futures, stock options and stock futures all expire, and that the effects can be felt on Thursday night and Friday morning when it opens at when the markets open at 2:30 on Friday afternoon. Anyway, that's it for the week. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.